The Inflation Reduction Act passed both houses of Congress, and in today's show, we're going to talk about this bill and how it may or may not serve you, what it means from a tax standpoint, and the biggest question on everyone's minds, will it actually reduce inflation? The cost of goods and services are continuing to go up, and will this bill help?
Welcome to the Your Life, Your Money podcast with Scott Searins, teaching you how to thrive in life, wealth, and retirement.
Welcome to another episode of the Your Life, Your Money podcast, where we discuss thoughts, strategies, and actions to help you thrive in life, wealth, and retirement. I'm your host, Scott Searins, and in today's show, we're going to talk about the Inflation Reduction Act. Maybe you've seen this in the news, maybe you've seen some headlines about it. Well, it's passed both the House and the Senate, and as I'm recording this today on Tuesday, August 16th, President Biden is scheduled to actually sign this today. So in today's episode, we're going to talk about where is the money coming from for this bill? What could it mean to you from a tax standpoint? The money that's coming in, where is the money going? What is it going to support? How this bill may or may not serve you. And there's some key points in here from a Medicare standpoint as well as private health insurance standpoint. And then at the end, we're going to talk about how it will reduce inflation, or actually answer the question of, will this reduce inflation? And you'll see as I get to the end that the title of this act, this bill that's being passed, might be a little bit misleading from one of the budget reviews that was done that I'm going to share with you today. If you've been enjoying the podcast and the shows and you've been finding value and benefit in them, subscribe on your favorite podcast player. That way you get notified weekly as we continue to come out with new episodes to helping you build wealth and being prepared for your retirement future. Also, sign up to be on our Insiders mailing list. If you're not getting weekly emails from us, sign up for that Insiders mailing list. You go to lifemoneyshow.com. Again, that's lifemoneyshow.com. Scroll down and you can put in your information to sign up for the Insiders mailing list. What it is it's our weekly email list. It's going to provide you tax reduction strategies, retirement income strategies, wealth building strategies. And what this means to you is to help keeping more of your retirement savings with you versus paying it in taxes to the IRS. It can mean to you increasing your retirement paychecks. It could also mean to you understanding and figuring out how and utilizing strategies and actions to help you enjoy life today, at the same time being financially confident about your tomorrow. Okay, so what is the Inflation Reduction Act? Well, it is a climate, tax, and health bill. And I'm just reading the summary. Now, I've got a lot of sources that I've utilized to help provide you today's information, and a lot of good news articles as well that you might want to read through about the Inflation Reduction Act. So if you go to lifemoneyshow.com, go to the show notes, we're going to list out all of the resources utilized into today's episode. So lifemoneyshow.com, go to the show notes, and you'll find the resources there. You'll be able to click on them and read through some of the different news articles as well as summaries. So on the summary here, the summary page, the Democratic summary of this bill, what it said, total investments. That means investments supposedly in us, right? In the U.S., it says total investments $437 billion. So this is where is the money going? What is it going to support? And I'll walk through some of those. And then where is the money coming from? So it says total revenue raised $737 billion. From, we've got what they're doing is a corporate minimum tax, prescription drug pricing reform, IRS tax enforcement, we've got stock buyback fees, and then loss limitation extension. So 737 being raised, 437 billion going out, and that says a total deficit reduction of 300 billion. And of course, these are just some very large numbers. And the other thing that I want to make very clear as I read through this is a lot of this is over the next 10 years. Now, there are some great points in here, and we're going to dive into those because I want you to understand when it says where the money's coming from, how that may or may not impact you in your future. Where is the money going? There's some great points from a Medicare standpoint, private health insurance standpoint, all which will potentially impact you. So I think it's very important to understand those. And then that deficit. But all of this is over 10 years. And so with all of these, right, we can get excited when we see some of these big numbers and what does this mean and how's it going to impact us? But remember, it's over 10 years. And a lot of times, rules, laws, new bills will get passed, they'll change, they'll be amended. And so will all of this fully take place? Well, that's to be determined by members of Congress over the next 10 years to see if it all stays in place, just like it's showing. But that's what the targets are right now. And then, like I said, the title of the bill itself might be a little bit misleading, as it's called the Inflation Reduction Act. And you'll see we've talked so far about climate, health, and tax. And so where does the inflation reduction come in? I'm going to talk about that at the end of the episode. We've got a really good review here from Penn Wharton, University of Pennsylvania. It's their budget model. It says Senate passed Inflation Reduction Act, estimates of budgetary and macroeconomic effects. I'm going to talk about that at the end. So let's start with this. Let's start with where is the money coming from? How are we going to pay for this new bill that's being passed and the investments that are going out from it? Okay, in regards to how they're going to pay for this bill and the money that is going out from the bill, where the money is going, how they're going to pay for that, really is two parts. One, there's multiple parts, but I would say two of the largest parts that could potentially have an impact on us. One is a 15% corporation alternative minimum tax for corporations with book profits exceeding $1 billion. Now, you might look at that and say, well, geez, that's just the big guys. And stick around in a few seconds. I'll kind of say how that can impact us. The other is a 1% excise tax on stock buybacks. So if you think about corporations that are traded on the public market, there's two ways for corporations to return money to us. One is through dividends, right? The dividends are when a corporation is paying out their profits in these dividend checks. A lot of times you don't see a check in the mail. The dividends might just get reinvested in your investment account. The other way are through stock buybacks. And there's a lot of different thoughts and theories on stock buybacks. One is that it allows the investors to sell back to the company, and at the same time, the company buying these stocks back, so the investors are trying, not to take a loss. The company's buying them back and using this also maybe as an opportunity to, boost the value of the security of their stock for not only the company, but for others as well. Sometimes people say that it's used to drive up the value of different companies. So you can see here, one, they're pushing the taxes onto the corporations. And a lot of really large corporations do these stock buybacks. Now, how could this then potentially impact us? Well, depending on the corporations, we have to think about this. A lot of these corporations are driven by shareholder expectations. People like you and I and others that are holding a share of the corporation, holding ownership in the corporation. And our expectations are for these corporations to continue to make a profit, drive a healthy business, and that their profits and their revenues go up over time. So think about this. If you tax the corporations, this cuts into their profits. And so they have a few things that they could do. One is they could just eat the tax, meaning, unfortunately, their profits are not going to be as high. But remember, they're driven by shareholder expectations. So a few other things that they could do is potentially raise prices, meaning depending on the corporations that are impacted, then prices could potentially go up for us. or they might need to look at their business and decide where they make cuts. Hopefully they're not making cuts from a human resources standpoint of people, but they need to then look at their business and say, where do they make cuts? So could this impact us? Maybe no. Maybe it doesn't flow down that chain and that chain of events to impact us. But also maybe yes. Just remember when they're taxing corporations, if that corporation's going to try to maintain the profits, to maintain shareholder expectations, prices could then potentially go up, or they need to make cuts to maintain their profit levels. So how are they paying for it? That's the primary ways. One is the tax on the corporations and the excise tax on stock buybacks. But then also it talked about here IRS tax enforcement. So let's just talk about that for a little bit. As part of the bill, $80 billion is going to IRS funding over the next 10 years. Now, this can potentially help and hurt us as well. Not hurt, but provide some additional challenges, over these next 10 years. So let's talk about this. Over $80 billion. That's a lot of money in IRS funding. And part of that money is to go towards boosting audits of corporations and wealthy people, but then also going towards upgrading technology as well as improving customer service. I think we can all agree that right now the IRS is really behind. It said here in one of the articles, again, go to lifemoneyshow.com, look at the show notes. I'm linking to all of the articles there. And it said from a customer service standpoint, over the last year, they answered 2.7 million of the 27 million calls that they got. So 27 million calls came in, and they only were able to answer 2.7 million of them based on the staff that they currently had. And then as of early August, it talked about that they had a backlog of 9.7 million 2021 returns. I'm certain if you've had to do anything with the IRS, you're probably just as frustrated as I am. So good news is part of this is going to funding IRS, right? Hiring more people on the IRS staff. Now, unfortunately, only of that $80 billion, it seems like only $3.1 billion is going towards taxpayer services. A lot of it's going towards boosting audits of corporations and wealthy people. So what's the potential impacts on us here? Well, the good is that, hey, there are unfortunately folks out there, companies out there that have been evading the IRS, not paying their taxes. Now, we're not saying not paying their fair share of taxes. People who just have not been paying their taxes. And so these audits of people that haven't been paying their taxes could really help out us as a country, getting everybody to pay what they owe. So that's one good thing. But another good point is hopefully this brings more customer service to everyday people like you and I. But just remember, it's going to take them time to hire. And then the new people have to be trained. And then these new hires have to get up to speed on regulations and tax laws. And they're not going to know everything in regards to all of the IRS codes right away. So while it sounds great, it's all going to take time. And all of that $80 billion, not a whole lot of it is actually going, when you look at it from a percentage standpoint, is actually going to taxpayer services. The other thing to just be well aware of, because they're talking about boosting audits, and of course they say large corporations and wealthy people and upgrading technology, but reality is this could be boosting audits on anybody that owns a business or does, independent contractor work. If you're self-employed, if you're 1099, if you own a small S-corp business. In the end, while they might say where they're going to focus, this could open audits to a lot of different companies. So make sure that you're following rules and regulations and all of the codes, but just be aware they're putting a lot of money towards this. And if they're going to put a lot of money towards it, I'm guessing there's going to be somebody overseeing it who's going to want to make sure that they're getting a return on their money. Now, following all the rules, regulations, etc., I'm certain everything will be just fine. But just be aware, if you're a small business person, if you're self-employed or an independent contractor, 1099, then this could open potentially more potential for audits in regards to your overall books. So let's shift over to where is the money going? How would this bill maybe serve and help you? And the first part is prescription drug price reform. The second part is for those that are buying their own health care coverage on the Affordable Care Act marketplace. So let's start with prescription drug price reform. This bill empowers Medicare, which I guess this has not been possible before, but empowers Medicare to negotiate prices for certain drugs covered under two parts of Medicare, Part B, which is the healthcare coverage, and Part D, which is the pharmacy portion. Now, that does also another thing. By 2025, it's going to cap the out-of-pocket cost at $2,000 for people in Medicare Part D. So, hey, a helpful thing there. Starting in 2025, it's going to cap your out-of-pocket cost at $2,000 for Medicare Part D. The negotiation on the different drug prices, this is actually going to take place in 4 phases. And it sounds like, boy, hey, we're going to get to negotiate all the drug prices out there. However, it's going to be narrowed down to 100 different drugs that they get to negotiate the price on. It's going to happen in 4 phases, and it's going to take effect from 2026 through 2029. So again, this is more down the road, but hey, that, in 2025, capping the out-of-pocket costs, that could be helpful for folks that have a lot of out-of-pocket costs in regards to your prescriptions. And then also hopefully it just helps the overall system in negotiating some lower prices. But between now and then, it's quite possible that rules, laws, and more bills could be passed and changed. So we'll see what happens on that one. Then the other part, like I had mentioned, for those that are buying their own health coverage, there is a 3-year extension of the enhanced subsidies for people buying their own coverage on the Affordable Care Act marketplace. So these subsidies, and if you're buying your own health coverage, again, on the marketplace, you're probably working these subsidies out with your tax person. These subsidies were slated to end this year, 2022, and what this is doing is it's extending them until 2025. Also, it talked about another kind of plus of the bill is that the premiums should hold mostly flat for next year, 2023. So if you're retiring before age 65, you're able to keep your income low. These subsidies will also help you keep the cost or the premiums of your health insurance low. This, folks, is where tax planning comes into place. You've heard me talk about tax planning a lot on this show. And this is where tax planning, tax diversification of where you're putting your money all comes in, because doing the proper tax planning, tax diversification of your money can help you lower your actual taxable income and then maybe help you qualify for these different subsidies. And this could be for anyone. It doesn't really matter how much you've saved up, whether it's $500,000, $1 million, or more. It's all about where the money's coming from and then that you need to live and how is that taxed. And if you can structure yourself in the most proper way, then you might also be able to qualify for some of these subsidies. So there we have it. Where is the money coming from to support this bill? Where is the money going to? Hopefully a couple points there that may help you in your future. But then the part here, right? The title of the bill, we call it the Inflation Reduction Act. So how is this bill going to reduce inflation? What we've all been waiting for. And I've got one article here, and I'm certain that there's others out there, but I wanted to share this one article here from Penn Wharton. It's their budget model. Again, I've got a link to this in the show notes, lifemoneyshow.com. Go to the show notes, and we'll have a link to their article here. But let me just read off the key points, and then they dive into it even further to give all of the detail of the article. But I think the key points really sum it up well. will this bill help reduce inflation? And based on their budgetary estimates, it says the act would have no meaningful effect on inflation in the near term, but would reduce inflation by around 0.1 percentage points by the middle of the first decade. These point estimates, however, are not statistically different from zero, indicating a very low level of confidence that the legislation would have any measurable impact on inflation. It says relative to current law, the act would slightly reduce GDP, gross domestic product, in the first decade while slightly increasing GDP by 2050. These estimates include the impact of debt reduction, carbon reduction, and tax incentives on investments and working hours. It says most but not all of the tax increases fall on higher income households. However, future generations, including higher income households, gain from the improved economy, including a reduction in carbon emissions. And then the other point that it talks about here is it says that it estimates that the Senate-passed Inflation Reduction Act, as written, would reduce cumulative deficits by $264 billion, so not the $300 billion that they're claiming, over the 10-year budget window. So, unfortunately, even though it's called the Inflation Reduction Act, one budgetary review here says that it's a very low level of confidence that would have any measurable impact on inflation. That's not, again, not a political comment, just a review of the act. So if you were caught up in the headlines or if you're caught up in the title of the bill, well, I'm sorry. It seems overall, will it reduce gas prices? Probably not. Will it reduce grocery prices? Unfortunately not. The title of the act is very misleading, but hopefully it does help on the Medicare standpoint, and for those that are on private health insurance through the marketplace, there are some potential ways, depending on your income, to continue to have some subsidies towards your premiums over the next 3 years. So while this bill might not help with reducing inflation, if inflation is still on your mind and how it might impact your retirement, I'd highly recommend going back and listening to episode 41. So again, that's lifemoneyshow.com. Episode 41, Is Inflation the Biggest Threat to Your Retirement?, where we talk about thoughts, strategies, and actions in regards to how to help your retirement savings keep up with inflation and last through your retirement. Folks, I hope that you found this episode to be of value and benefit. Again, if you'd like to hear additional episodes just like this to help you build wealth and reduce your long-term tax picture, subscribe on your favorite podcast player. That way you get notified as we are coming out each week with new episodes, all targeted towards that. In addition, if you're not getting our weekly email, go to lifemoneyshow.com, scroll down, sign up to be on our insiders mailing list. And again, what it is it's our weekly email, and it's going to provide you tax reduction strategies, retirement income strategies. We're going to talk about strategies, again, to help you build wealth, live life, and be prepared for your retirement future. So if you're looking to keep more of your hard-earned retirement savings with you versus paying it in taxes to the IRS, if you're wondering how to increase your retirement paychecks or just how to live life today and be financially confident about your tomorrow, go to lifemoneyshow.com, scroll down, and you want to sign up to be on our insiders list. Thanks again for joining, and I look forward to our next conversation to continue to help you enjoy life today and be financially confident about your tomorrow.
Sierens Financial Group is an independent financial services firm that utilizes a variety of investment and insurance products. Investment advisory services offered only by duly registered individuals through AE Wealth Management, LLC. AE Wealth Management and Sierens Financial Group, Inc. are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Sierens Financial Group, Inc. is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein, provided by third parties, have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Sierens Financial Group, Inc.